What's up, everyone? In this video, we're going to be doing the weekly recap of the stat modeling program. We had a very volatile week in the markets, as on Thursday and Friday, the S&P 500 tanked down in a very drastic way. We also have some giant earnings releases on the schedule, and we had a couple of very notable earnings releases this week from Tesla, Snapchat, and Netflix, just to name a few of them. Next week, we have some huge companies like Apple, Microsoft, Amazon, Google, and many more. So the volatility is not set to slow down anytime soon. Volatility is a good thing and a bad thing. One, volatility can happen to the upside and the downside. Two recent examples of this is the insane level of upwards volatility that we saw in the S&P 500 from March 15th to March 29th. And another example of volatility, but to the downside, would be what we saw in the market over the past 2 days, which was just crazy to see. Another thing when it comes to volatility increases is normally it increases the prices of options in the short term. So that makes options more expensive, obviously, which is good for short put trades and for any trades that are currently open for long options. So we'll see what happens. Looking at some of the plays from this week, we did open two new swing plays with Palantir and Logitech. These plays are setting up pretty well. They have a lot of time left in them. Both plays fell a little bit with the two big red days that we saw on Thursday and Friday. So that sucks to see, but they do have a ton of time. The Palantir play has a ton of time, and then even the Logitech play has a couple months. So they should be good. Looking at the bot plays from this week, the bot did a pretty dang good job. 4 out of the 5 plays would be considered winners, in my opinion. The one loser, I would say, would be on Friday with Alibaba. That play didn't really do anything. It did fall a little bit. At its highest point, it popped for 7.1%. The other plays worked pretty well, though. The Thursday play popped for almost 33%. The play on Wednesday popped for popped for over 18%. The play on Tuesday popped for 35%. And the play on Monday, which was the best play of the week with Zoom, popped for 44.6%. So overall, the bot had a pretty good week, even with all of the volatility in the markets, which is really good to see. Like, even for a day like Thursday, like, it opened up higher, the market did, and then it ended up tanking down a lot lower. So even with all that volatility, it can be really hard to do short-term plays, but the bot did a pretty good job. So that's good to see. The theta plays are working great as usual. Short put options are, in my opinion, the best strategy out there. You literally get paid to buy shares of a company that you like at the price you choose, which is dictated by your strike price. The only thing that you need to make sure of when doing short put options is that you are okay with owning the shares for the long term. For example, if you're shorting put options on JP Morgan, you're going to want to make sure that you're okay owning shares of JP Morgan for the long term. Never short a put on a stock that you're not okay with holding. So that's the main thing. But besides that, with the combination of falling stock prices, increasing levels of implied volatility, and increasing levels of just uncertainty in the markets, the short put strategy will be the way to go. So keep that in mind. Besides that, thank you guys so much for watching today's video, and have a great weekend.